ending stocks than expected. We are going to get Mike Zuzolo's reaction on that, and yet more trouble in China. Right here on Connected Farmer, your channel to keep you up to date with the latest trends in agriculture and livestock. If you are new here, please make sure you subscribe. Mike, how are you today? So, for the three major crops, we are seeing higher ending stocks than expected by most market analysts. Well, what's your reaction on that?
Well, I'd say that's the U.S. perspective and the domestic supply here, Luis, but I think the world numbers show quite a different situation. And I think that's one of the things that, at least in the beginning, I'd like to highlight for your listeners and your viewers. When you look at, and I'll go from the worst to the best, when you look at the world soybean ending stocks and stocks to use ratios, just in 1 month, we went from the tightest or smallest stocks to use number in world soybeans to the in 3 years to the largest in 3 years, just from this one report in October, as USDA raised substantially again the US national yield. And so the United States ending stocks number of 320 million bushels and a price reduction of 55 cents a bushel versus last month really doesn't add up as well in my mind, and doesn't open up the downside potential in the market as much as the world ending stocks of jumping over to almost 105 million metric tons. And as I said, the highest stocks compared to demand and usage in 3 years. And so it really adds, in my opinion, a lot of pressure and in the South American crop, weather, planting progress, farmer selling, these things become enormously important to opening up the downside potentially in the soybeans. And in that respect, it was probably the worst soybean report I've seen this year from an analytical perspective, of causing me to be more nervous about further downside. There's some good things out there. There's some technical support levels. The meal crush margins are supportive, but I'm not sure the trade will really look at that when it comes to this next 30 days. And so I think that's the way I'd like to frame this post report environment. So if we move on then to corn, world stocks to use ratios real quickly, still the tightest in 3 years, even after jumping about 0.3 of a percentage point this month versus September. Best of all, and this is where the soybeans probably have the best potential to find a low, helped by wheat and helped by corn, is the wheat ending stocks globally came in even tighter and are a new 3-year low in stocks to use ratios. And the USDA did a really enormous job of cutting stocks to use in 1 month by 0.7%. So in my opinion, this really opens up the upside for the wheat market if the demand is there and the US dollar doesn't rally too sharply. And that may be the very best thing we could look for from a standpoint of why the beans don't need to go below 11.95. And if we close this week out below $12, that will be the first close on a weekly basis below $12 since I think December of 2020.
So the report has not changed significantly your marketing puzzle, your recommendations.
No, it's like a lot of reports, with that come in worse than I wanted them to. I was on the right track, but I just didn't have enough sold. And that's how I look at it in hindsight. Had it been a friendly report, I would have been glad that I did not have as much sold. But, I think this is where, as you and I've talked about, I cannot argue USDA's yield number in soybeans. I can argue their tenth or 0.2 of a bushel increase in corn by the way they went about it and based upon the rhetoric and the anecdotal evidence that I'm getting from clients and subscribers on the combines and out in the fields. But soybeans, I am hearing a better yield trend as the days go on for the most part.
Yes, on the other hand, we are starting to have to listen to some stories about bad weather in South America, specifically in the state of Paraná, in Brazil again.
Yeah, and I was going to ask you, I just gotten a new weather update and checked it against my models that I pay extra money for, and um, it looked like maybe other than Paraná, Argentina is a much more bigger worry to soybean production and La Nina coming in and affecting us. So that's question one. Do you agree with that? Question two, if that's the case, it looks as though maybe the Pampas regions are going to be looking at some more precipitation here in the next 6, 7, 10 days, but there's still going to be some areas left out that are pretty critical corn and soybean producing areas. Would you give me an idea on that?
Yes, it seems so, but it's still, as Argentina plants later than Brazil, Brazil is more advanced on the planting progress.
And you had put the Brazilian planting higher than I think Ag Rural at this point. Were you closer to 20 or 25% planted?
Just for the state of Paraná.
Okay, so nationally, that 10% number you would agree with from Ag
Yeah,
Rural?
yeah.
Okay. So maybe what I would conclude then, based upon what you just told me, is that what we just talked about, if the wheat market can't find some support for the beans, then the beans have opened up the downside, especially if we don't see a lot of Chinese buying. I mean, we are about $20 a ton cheaper than Brazilian beans, and probably almost $40 to $50 a ton cheaper than Argentine upriver beans right now. So we do have a better look in the export market, but it's a real question mark whether China is going to buy a lot of soybeans here given what they're going through domestically and with their energy complex.
Yes, and I just heard new stuff about China that would bring more stress into their financial markets. Is that a different group than Evergrande Motherland would default in some bonds, so that will be another problem, and it seems that this group is interconnected to Evergrande.
Yeah, and this is where the currency markets have really done a good job forecasting, how they feel about everything. If you look at the US dollar index, that's one thing, but you got to look at the Brazilian real and you've got to look at the Chinese yuan too, as far as what they're doing against the dollar. And both of them have weakened substantially here this week. And I think that's probably the biggest issue that I have in relation to what you're talking about with China. I believe that the financial markets will kind of decide whether they trust China's economy in the last quarter of 2021 and heading into 2022. I was surprised, for instance, today that the IMF came out with their new World Economic Outlook and they put China's economy for next year, their growth, and it was either 5.8 or 5.9%. Most economists that I work with or look at in my own analysis would suggest we're a lot closer to 5% for 2022, given what's happening in their property market and given what's happening in their power generation market. A lot of people have been calling and wondering why is the coal price going sharply higher? Why is the Chinese coal groups in the Northeast? Why are these power plants shutting down? Well, look, we're starting to find out that these some of these coal plants only had 2 days worth of supplies of coal, and that's why they haven't been firing because they didn't have the supply. They were going to literally run out of the supply if they had not cut back on their generation of coal power and natural gas. There's just not a lot of natural gas and coal fired generation that you can substitute with that the plants run both coal and natural gas. It's just not there like it is like in Europe or the United States. And so I don't think China's out of the woods here with their energy issues. And I don't think they're out of the woods yet, obviously, with their property issues when you've got a third major property developer now looking like they're going to default on their foreign bonds. And that would say to me, watch out for that Chinese currency to make a new multi-month low. Look out for the Brazilian currency to maybe make a new multi-month low as well, because China and the emerging markets, oftentimes the investors kind of blindly look at them as one and the same.
Yes, with China freezing right now their economic activity, do you think that would push the logistical bottlenecks to last longer?
Yes, and I think most importantly for the commodities in the short term, you would not get boats offloaded as fast. We've heard a lot about our bottlenecks out in in the California ports and even New York now and even Savannah, Georgia now. Well, that makes sense because those ports that were earlier bottlenecks, shippers and businesses tried to find other ports that they could go to as another substitute to get their ships offloaded. Well, now they're starting to back up. And I think the same thing's happening in China. So you have that going on one side. And on the other side, you have outright power failures and crushing plants, for instance, that are not producing. So does China import more meal? Well, it would make sense that they would if they're not generating power, but would they not import more meal because they're not going to be able to get the boats offloaded for 2 or 3 months? So it's a real dilemma that we're in right now when it comes to the global economy and the supply chain. And this goes back to the heart of this really is in China. And so I really am surprised that the IMF has such a high GDP for China. So the best thing we can look at is in the next couple of weeks that the biggest fears are not realized in the news and in the markets right now, that we see the supply chain get worse and instead it improves. And that again, that's a distant desire or want. It's something that is probably off in the I wish category, but it's something that we can watch out for. But otherwise, the path of least resistance after this USDA report is to go ahead and process the harvest and go ahead and continue to go seek out demand by taking prices lower as supplies build. Again, I would reiterate, I think the beans could stop immediately if the wheat would find support here, because I think the corn would find support as well, because corn stocks are very tight, even domestically here. And I think a lot of the domestic carryover that we saw in the USDA report for corn today was due to Hurricane Ida backing up old crop supply. So I think that's a big issue that maybe could play out to our benefit.
And what do you think U.S. farmers are going to do as they are harvesting right now?
Yeah, I hope what they do is what I've been recommending and dump more off the combine on the soybeans, even after these kind of tragic prices. If we can't hold up these prices at the end of this week and we lose that $12 handle on a weekly close, let the soybeans go off the combine before the basis gets too negative. And then look maybe 30, 60 days down the road to go ahead and buy back on the paper side, with the idea that maybe Argentina does have more of a dry weather scenario and a La Nina, and we can improve upon our selling price by reowning some bushels.
All right. Thank you very much, Mike.
Great to be with you, Louise. Thank you.